All right, so this is officially the November 2022 stock market meeting. 346 members. We meet the first Tuesday of every month at 7, and it's been virtual, and that's why I threw it out there that December. Hopefully, we can meet in person at Lima's on Route 40 in Catonsville to just have some food and fun right before the holidays get started. And I'd love to meet everyone in person. Of course, we are always open to any topic that you guys suggest. So I would encourage you to send me some emails or type in the chat if there's a topic that you want to hear about in the future. I'm definitely open to talking about just about any topic. So if you got a suggestion, something you want to learn, put it in the chat. We welcome everybody from beginners to experienced people like JC. Thanks for being on the call, JC. I really appreciate it, man. The meetup group now has a donate button. So if you'd like to go to our site, and of course, I put that link in the chat. There's a donate button where you can donate to help raise funds, and then we can have this get together in December. So there's a link right there, but I also put that link in the chat. So I am your host, Coach Mike, founder of Walk On Consultants, and I truly appreciate you guys joining me tonight. There's a link if you'd like to book a free 15-minute appointment to decide if I'm the guy that you want to help you through your journey on learning more about the stock market. So I always thought the meetings were the same thing, right? An investment in knowledge pays the best interest, because at my core, I'm a teacher and I'm a coach and I love helping people. So I believe in learning before you start investing and not just getting a lucky tip. By the way, Powerball's like $1 billion now, right? So don't forget about that. So this month, we're going to talk about ETFs, right? But what is an ETF? Now, we all know that ETF stands for Exchange Traded Fund. Maybe we don't all know, but that's why we're here, right? ETF is an Exchange Traded Fund. Okay, so now we know what it stands for, but what exactly is an ETF, okay? It's a combination, it's a hybrid product, a little bit of stocks, a little bit of mutual funds, and we got ETFs. So I assume that you know what a mutual fund is, but let me not assume, right? Anyone that has a 401k at their job or any type of retirement plan at the job, probably 99% of the time is invested in some kind of mutual fund where all the money from everybody that works the company is pooled together and put into an investment fund, and it is managed by a professional portfolio manager. That's called a mutual fund, and they buy and sell stocks accordingly. If somebody joins and adds more money, then they got to buy more stocks. People quit or get fired or laid off or retire and they want their money out, then they got to sell stocks. It is in what we call an actively managed fund. They buy stocks, they sell stocks according to people joining and leaving, or according to market conditions. So that's actively managed mutual fund. And if you got a job in a 401k, you're in some type of mutual fund, guaranteed, okay? Versus just buying individual stocks. ETFs combine those two. So like I said, it is an exchange traded fund. It's listed on a New York Stock Exchange, just like any other stock. So if you go into your brokerage account and you want to buy stock in, let's say, Procter & Gamble, you type in PG, the quote comes up, you want to buy a share, 2 shares, 100 shares, you can do that. This works the same way with an ETF. You type in the symbol, XLK, it comes up as the technology ETF, you buy some stock. It trades all day long, just like stocks, okay? But it's a diversified mix of investments. It's not just one stock. It's a collaboration or combination of a whole lot of different stocks that are grouped together by sector, by industry, by geography. They have something in common. It's diversified, but the risk is spread across different companies. So just like a mutual fund, you got the diversification. Just like a stock, you can trade it every day. It's called an ETF, and we'll go into some of those a little bit later on. So it's sort of like a stock and sort of like a mutual fund, right? Because you've got diversification. But I would say the biggest difference is that in a mutual fund at your job, it's what we call actively managed. In an ETF, it's passively managed. They're going to pick 20 different companies, 30 different companies, and those are the companies that are inside of your ETF. And no one really manages it. It's really pretty much set unless a company merges with another company, unless a company goes out of business, files bankruptcy. The companies that they put into this ETF are set. And so it's really kind of an unmanaged portfolio. It's monitored, but it's not managed, okay? And that's why you can just buy and sell it all day and trade it like a stock. So it really does combine the best of both worlds of stocks and mutual funds. And it could be just about anything, just about anything. So here's a list of some of the different types. You see stock index ETFs, sectors, geography. Now, I'm not going to cover the leverage and the shorts because, or the currencies, because that's where you go way out on the risk scale. And so a lot of people on the call aren't that sophisticated. Some of us are, but a lot of us are not. So I want to keep it simple and not go into leverage and shorts. But after this is over, you can certainly ask me and we can discuss it. But I purposely did not include it later in the slides. So let's start with the basics. We all know about the stock market, right? The Dow Jones, the NASDAQ, the S&P 500. And so you can literally buy into the Dow Jones. There are 30 different companies on the Dow Jones. But if you don't want to buy individual ones, you can buy the DIA, the diamonds, and you've got a small piece of each of the 30 companies. The same with the NASDAQ. It's mostly technology companies. You got your Apple, Google, your Microsofts. But if you want to just buy a piece of each of those, just buy the QQQs. And of course, the biggest index, the biggest stock market index is the S&P 500. You can buy the SPY, SPY. It gives you a small piece of all of them. That way you've got instant diversification and you're not relying on just one company to do well or two companies do well. You got a small piece of each of them. So those are what we call broad-based ETFs. Okay. Now, the S&P, as I mentioned, 500 companies. What if you don't want a piece of all 500? You want to kind of narrow down. And I like technology. So if you buy the technology, the XLK, I believe it is, right? You're going to have a lot of technology companies in there, software, hardware, and you can even go deeper. I bought one that's called the SOX. It's all semiconductor stocks, okay? Same with healthcare. That's XLV's broad. But if you want to go into just pharmaceuticals or just biotechs, you can do that. Financials. There's going to be XLF for financials in a broad sense, but if you want to go deeper and just do banks or regional banks or brokerage companies, you can certainly do that, and on and on and on. But this way, you're buying into a sector or a sort of an industry without having the risk of buying just one stock. Like if you bought just Apple, well, it's just Apple. But if you bought technology, your risk is spread much broader. So let's go deeper. Let's say you want to invest in a country, right? China's a really, the second largest economy in the world. So you want to buy the China large cap, it would be like buying the Dow Jones, okay? There's another China fund that has a lot of the internet companies in it, like Alibaba and Tencent. You can do that. You can invest in Canada, Japan. Basically, if there's a country out there that you can probably find a way to invest in it, from Brazil to Thailand to the Philippines to Australia, and so on and so on. But I just listed a few here. Okay. Commodities, you can invest in gold. Let's say gold is, I don't know, like 1,800 an ounce, and you don't want to buy the actual gold. You can buy a gold ETF. You can buy something that only invests in the gold miners, the companies that actually mine for gold, or silver or natural gas or oil, same concept. Okay. That way you're not just buying one, you're buying a broad basket of them. And of course, most popular, this just was popular a few years ago, is coming back because Joe Biden just announced that he wants to try to, get this thing legalized, at least on the banking level where these companies can have a bank account. I don't know if you guys know that it is legal in maybe about 37 states, but still illegal on a federal level. Federal level is, I think it's classified as a class 1 drug or something. It's in the same category as heroin, which doesn't make a lot of sense. And because of that, these companies are not allowed to have bank accounts. And so their cash business is all cash. So what Joe Biden is hoping to do is to at least get them to where they can have a bank account. And that will give them a little bit more legitimacy. But you can certainly invest in one of these. I bought one of the companies individually called Curaleaf, but you certainly can buy a ETF that invests in marijuana companies. And I think this is the last one coming up, right? Let's say you want to do alternative energy, because that seems like that's, again, the future, that we're going to get away from fossil fuels and oil, solar panels, right? Wind energy, or just maybe clean energy, which includes probably some hydrogen and other forms of clean energy. So it doesn't have to be, it could be just solar, it could be just wind, or it could be a combination of anything that's considered clean energy. So these are ways that you can diversify your portfolio and not just rely on the success of one company is investing in ETFs. So, you know me, I'm always preaching homework, right? I'm a teacher. So do your homework before you invest, okay? Understand your risk tolerance. Just because they're all ETFs doesn't mean they're all created equal. Doesn't mean they're all the same amount of risk. Some are riskier than others. Some are less, some are less risky than others, right? But you got to know what's in it. Are you investing in the gold, physical gold, or are you investing in the gold miners? Are you investing in technology, or is it just software companies, or is it software as a service companies? Are there, know what's inside the ETFs. If you go to Yahoo Finance and you click on holdings, it'll show you what's in the portfolio. At the very least, it'll show you the top 10 holdings. So do your homework, know what you're investing in, okay? And if you still need help, my link is in the chat. Book an appointment with me, and I'd be happy to walk you through the steps. But remember, I'm more like a personal trainer when it comes to fitness, but we're talking financial fitness. I believe that you got to do the push-ups. I will help you, but you got to do the work. I'm not going to do it for you. I'm a coach. I will help you, but the work's on you. So with that, I will say that never stop learning. Education is a journey. It is not a destination. And that is that. I will open the floor. I will stop recording and open the floor to anybody who wants to jump on in. As soon as I figure out how to stop recording, right? This is crazy.